All right, let's move on to Carlyle if we can, because this is a company I know fairly well. Done a number of interviews with its former CEO, Kewsong Lee. This is a surprise this morning. Interestingly, at Carlyle, which of course, remember, was a founder-led organization for many years, Conway, Rubenstein, they had him sign a 5-year contract. And so when your contract's up, you got to negotiate a new employment contract. And apparently during the course of that discussion, my understanding is essentially the two sides were not really in agreement in terms of the strategic direction of the company. The release itself doesn't say that specifically. It simply says they agreed to, as part of their discussions, the timing is right to initiate a search for a new CEO to lead Carlyle forward in its next phase of growth. So he steps down immediately, and one of the old founders steps up. Conway steps up. He will be, for now, interim, CEO and the like. But they're going to have a search committee. They're going to try to find a permanent successor. That's what I'm hearing, Jim. Essentially, it's a classic story, sort of the old guard kind of still involved. They own 22% of the company. You know, he may have been pushing too far too fast in terms of changing the way that Carlyle did business. This was typically an LBO company, and then obviously, like so many others, changing its profile to become a lot more than that, moving aggressively into fixed income markets in terms of raising money and other potential and other investment areas.
But David, we struggle because when we think of, say, firings in sports, we know that there's something very wrong if it's a weekend firing.
Yeah.
It just seems like this is a shocking thing for a very large firm that I've regarded as being incredibly well run. And it still may be. I'm not questioning that. They've had a history, remember Glenn Youngkin, now the governor of Virginia, was in there as its CEO for some time, but he was not, and Mike Kavanaugh, our CFO at Comcast, had a cup of coffee there for a while, was thought perhaps to be ascending to a leadership position. Q Lee, it's still the old guys. I mean, Conway and Rubenstein and, the others who are obviously still have a great deal of influence there. All right,
we'll see. The market not responding particularly positively. Can't blame them. No CEO announced. No real discussion of, how are you guys seeing the world differently than Mr. Lee was in terms of how you're going to position the business. We'll keep an eye on it, but an interesting and unexpected change at the top there.
It's unexpected again. NVIDIA only down 11, but like we spoke during the break, when you have a stock that is come down from 346, it may not be as revelatory because of the Great Reset.
Well,
I'm
concerned
about the industrial
side. The market had already been adjusting for its expectation of a warning, of a miss.
But AMD did not talk about that much weakness in gaming. I think that that it is great that NVIDIA is able to say, okay, listen, we're not a gaming company. I did not like that there were other businesses that were weak and a big charge taken about supply chain. Because I'm not, they had to pay up for certain things. This is the big reset. At the same time, David, you don't want to see it. A Charitable Trust owns it. I don't want to see this. But it's also not revelatory, and it did sell a lot of stock because what was it? Heck was it doing at $750 million? You want more revelatory things? Why is J&J not down if the Medicare is really going to negotiate? Now, the company that is hurt the most is Bristol Myers. And why is Bristol Myers up?